The stock's dropped by about 50% in the last month.
This one fell, and it fell hard and fast.
It's trading as almost a penny stock right now.
It's been a month of hurt for growth investors in many small cap stocks.
There's going to be more volatility. That's the price of admission for getting into these stocks at the stage that they're in now.
MarketBeat's Chris Markoch dives into 7 high-growth stocks that are all down under $15 right now, but still show some strong potential for long-term growth.
If you're committed to investing in these companies for the long term and you have the patience to hold on, I think there's genuine upside for this company right now.
Chris, so great to have you back on the show today, talking about a list of stocks that a lot of our viewers are really interested in right now. It's not such good news, but could potentially be an opportunity. We have a list today of 7 high-growth stocks that a lot of our viewers are interested in or have invested in that are all down significantly right now. The stocks on your list still have some strong potential, but before we get into the individual names, let's just talk about why are we seeing so much volatility, especially in these small cap companies.
Right. Well, the names on this list that we're talking about today, Bridget, all have 2 things in common, really. Number 1 is that none of these companies are actually delivering positive earnings yet. And number 2 is they have little to no revenue. And the reason why that's significant for investors, I'm not here to bang on any one of these stocks. I think all of them have potential, otherwise we wouldn't be talking about them. But they're all in the speculative stage. And what that means for an investor is not that they have a higher propensity to fail than anything else, but that there's going to be more volatility. That's the price of admission for getting into these stocks at the stage that they're in now. Again, I'm not saying that they can't be something really good in a few years, but right now they're not there. And that means that when the market moves down, these probably are going to move down more aggressively. At the same time, when the market rallies, some of these stocks may be able to rally more aggressively. So that's the volatility you're playing with right now.
Yeah, we've certainly seen that more aggressive downtrend in these stocks compared to the rest of the market. So let's get right into it.
Yeah.
A reminder, as we go through this list of 7 stocks, I'm considering all of them to add to the Bridget's Buys watch list. This is a new thing that we just launched this week. So I'm going to be listening in to these conversations, asking questions that I care about to know which of these companies I'm going to choose to add to Bridget's Buys. And then at the end of the video, you'll see which one I'm adding to the list, and you can follow along the progress to see how much this moves over time. Let's get to that first name on your list. And this is a really interesting sector to look at, Chris.
Right. So the first name on my list here is Lithium Americas. Now, most investors, even if you're not invested in Lithium Americas, you understand what happened with this stock. Right around the end of September, there was the announcement that the U.S. government was taking a 5% stake in the company, and that sent the stock soaring. The reason why is because in addition to the fact that this company doesn't have revenue yet, it hasn't even started mining operations yet. However, because of the stake that the government's giving it, the company's going to be able to build out their mining operation in the Thacker Pass area. And so it also gives Lithium America now access to one of the largest known lithium resources in North America. That explains why the U.S. government is intensely interested in taking a stake in this company, because they desperately want to get a lithium supply chain in North America. Lithium Americas is a Canadian company, but hey, that counts right now. There's recent data that came out of China, which is the world's leading lithium producer, that says the global demand for lithium could grow between 30 and 40% in 2026. And that means, some analysts are saying, if you do some back of the envelope calculations, it means the price of lithium, the spot price, could increase by between 59% and 110% next year. Risk here for investors is Thacker Pass is not supposed to be going online delivering revenue for the company until 2027. So you don't really know where lithium prices are going to be at that point. But if they're going to go up that strongly next year, And this is a multi-year story, much like what you're seeing in gold this year.
Yeah, such an interesting story. We have to show the chart for this one too. The 52-week range on this one is a little wild
Yeah.
from $2 to $10, now sitting around that $4 mark. Really interesting moves in this one and very quick moves too. Do you think we're going to continue to see that volatility over the next year until there's actual profitability for this company?
You know, what I see, Bridget, is I see the stock it's trying to form a bottom right around that $4.50 level. You can see in the chart in the last couple of weeks, it's kind of hit that level, bounced up, hit that level again, bounced up, and it's hitting that level right now. So it's kind of confirming that that's where it seems like the bottom's going to be. So that's something that investors, if you're looking at this as a long-term buy, right now you can take a little bit of comfort in that. That may be the bottom. The question right now is, are we going to be topping out right around that $6 level, which is what you're seeing in the chart right now too. So it's been bouncing in that range.
Yeah, this is a really interesting one. It's the first name we're talking about, but it's one I'm really strongly considering as a potential to add as the Bridget's buy for the day because there is so much potential for the stock. It went up
Sure.
so high right away. I'm curious to see how long it takes to actually grow too.
Yeah.
Also, to note on this list as we get to the next 6 stocks on the list, these are all small cap companies, all under $15 right now. So really low price small cap stocks. If you're looking for other stocks in this small cap range, check out this latest free premium article we have just for our YouTube viewers. It's 5 small cap stocks with impressive growth and upside potential. This one just came out this week too. It's another interesting list of stocks, some different names in the small cap sector to look at right now. You can again scan that QR code, click that link, and get to the stock idea page if you want to explore that more and do some more of your own research there. All right, Chris, let's get to the second name on your list, still staying in that kind of rare earth space.
Yeah. So actually, that's a great segue. If you liked Lithium Americas, you might really like this one. This is called USA Rare Earth. The ticker symbol is USAR. Similar story here to Lithium Americas in that the company's not generating revenue yet and it's not operational yet. But again, just like Lithium Americas, they've entered into a partnership to acquire a UK company called Less Common Metals. They've just exercised some warrants to generate a $125 million in cash in the company. They expect that they're going to be operational at their Stillwater magnet facility sometime in the first quarter of next year. This falls into a category somewhat similar to Lithium Americas. This is a company that the US government kind of has on their radar as we need to get a rare earth supply chain again in North America.
Yeah, I think when we're talking about these rare earth stocks, it's really important to talk about why the government is getting involved. And that's because all of these materials are essential for creating the hardware needed to power AI. We all know these computer chips are in absolutely everything in our lives right now.
And that includes your workouts. I know you've never seen me outside of the MarketBeat studio, but just around the corner from our studio is the MarketBeat gym, where we have an awesome new piece of gym equipment to show you. This is the Avaron rower, and it's all about making workouts more high-tech and more fun. As investors, you might be pretty competitive, always looking for that next win. If that's what motivates you, they have tons of games in here. Or maybe you're not up for competing after looking at stock charts all day and you just need a little relaxation. Well, you can escape, and that's my personal favorite part about this rower. They have a lot of virtual options that let you go to the mountains. It's so relaxing, but also just a great workout and a great way to end the day. But we all know time is money, so if you just need to fit in a quick workout while still getting some knowledge, this is a great time to watch all of MarketBeat's videos. You can fit in a 15 to 20 minute workout all while watching one of our latest videos that drop every day too. So if you're interested in getting one of these for your own home gym, you can get a rower just like this one, or a treadmill or a bike. Again, all very gamified, all designed to make workouts a little less boring and help you have some fun all while working out. You can scan the QR code or click the link in the description to get a special price on your own Avaron home gym.
Back to the studio after that short break in the gym. I do think it's a great way to really show just how much demand there is for these chips and why these rare earth materials are so important. Chris, I do want to turn to a more serious tone on this specific industry. I think for investors who maybe got in on USAR early are cringing just hearing hearing this name because I think there's some people who've lost a lot of money. This one fell and it fell hard and fast, down 55% in just 1 month.
Yeah,
So I think just talk about that decline a little bit. I think
sure.
again, for some investors who've been burned, it's a hard name to look at.
Yeah, again, I think I'll go back to where I started at the beginning of this video and say that's the price of admission for stocks like this, and I know that that's cold comfort for a lot of investors, especially if they bought near the top of this. But the stock was rising really high because I think there was some anticipation that the US government might take a stake in the company as it did with LAC, and hope is not a strategy, and that hasn't paid off, and that's why the stock sold off very sharply as investors are looking at this and saying, yes, these companies are not, again, they're not profitable. There's very little revenue. And so the stock's coming down. Now, the question I have, though, here is once again, it does look like the stock's trying to find a level of support right around its current level, which as I see is around $12 a share. So the question there is the sell off over? These things are difficult to time. But again, I think there's genuine upside for this company, but it's going to be a long-term buy and hold.
Yeah, the stocks we're talking about today, none of these are specific buy recommendations. We are giving you some information, some stock ideas. We're looking at these stocks as potential opportunities, but
Yeah.
it's really up to you to see, is this risk worth it for me? Is this something I want to look into right now? So do your own research and make sure you have a strategy for how you're looking at these companies. Chris, let's get on to that third name on your list.
Okay, so now we're moving into the area of eVTOLs, flying cars, flying taxis, however you want to call it. And so one of the names you're going to be looking at here is Joby Aviation. There's been some pressure on this sector lately, and the pressure is really coming from skeptics who are starting to look at this sector and saying, yeah, but are people really going to use these products? Yeah, they're interesting. Yeah, we're showing the fact that we've got prototypes. The prototypes are working. You've got partnerships lined up, but how many people are really going to use this? Is there really a market for this? And so that's why you've been seeing the stocks under pressure. But Joby is one of the names to consider if you're looking at the sector. If you believe in the future of this sector, Joby's a name to look at. And one of the reasons for that is because of Joby's business model. They're taking a vertically or integrated business model, which means they're trying to own every part of their operation from, they're trying to own the planes, they're trying to own the design, the production, the operations, all of it, and they're doing that. That's going to be very capital intensive for them in the short term, and that's the specific concern with Joby is you've got to have pretty much flawless execution in getting all of these things going to eventually become a profitable company. And that's what you've got right now. But again, it's an exciting industry. And one of the areas that has been working for Joby is they've started to get government contracts. There's a significance to that because there is another wing of analysts that are saying if Joby and other eVTOL companies can prove the utility of these products in the government arena, it's going to make acceptance in the commercial sector much more likely. So that there's something going for it there.
Yeah, you kind of hinted toward this already, but we're talking about the eVTOL sector
Yeah.
here. So we're got another name coming up on the list. But I think it's
Yeah.
important to note that of this sector of stocks that we've talked about many times on the channel, Joby is doing the best. Yes, they're down, I think, over 20% in the last month, but that's less than some of the competitors out there too.
Very
So
true.
I'm curious to see why that might be. Why is Joby carrying better than some of the other competitors? And also, one of the things is these eVTOLs were supposed to be commercial in 2026. Is that timeline still sticking or not?
I think that the timeline's still sticking. It might not be commercial in the United States, though. There is partnerships with the UAE and in the Middle East that suggest that yes, they may be operational there for commercial flights, but maybe not so much in the United States. And that's part of the reason why you're seeing the drop off. Some of it's just, again, I think there's investors that are getting nervous about being in some of these more speculative names at a time when the broader market's selling off.
Really good point. Let's get to that next company on the list.
Well, so if we're going to talk about Joby, we're also going to talk about Archer Aviation. That these two right now are the two biggest names in the sector. The difference between Joby and Archer is really coming down to their business model, whereas Joby's really trying to own every aspect of the process. What Archer's doing is they're taking a different approach. And one of the things that they've done is they've bought a lot of intellectual property to try to leapfrog them ahead. Right now, Joby's perceived as being in the lead, and that's, I think, why Joby's getting a little bit more attention than Archer. But Archer has a lot of significant contracts, and they're also operating in that military arena. So this is kind of fascinating to see. It looks like Joby may get final FAA certification ahead of Archer. That will be a feather in its cap, but Archer's going to get that certification too. At least it would seem that way.
Yeah, I think the real difference here for investors is looking at the chart. They tell a very different story. Archer has fallen so hard and so fast, and it's down to almost approaching that 52-week low
Right.
to where it was almost when it was that penny stock range before we were even mainstream talking about Archer quite as much. Is that something more to be concerned about? I think that is my main question is just what's the difference? Why is one doing so much better than the other, even though they are both still down?
The only thing I can think of, Bridget, again, is I think there's just more belief right now that Joby's business model is going to be sustainable and it's going to be one that's going to get them, again, across the finish line faster, to commercial operations faster. And I think there might be some skepticism about how many names can actually be how big is this pie? Is there room for both? I think there's certainly room for both Joby and Archer. I think it's some of maybe the other names that you're going to have to be concerned about, but there's probably more of an asymmetric opportunity in Archer right now because it's down almost 40%. You're right. It's trading as almost a penny stock right now. I mean, it's down like $6. But Joby, I think, has the perception in the industry that it's the leader and it's farther along, even though it might not be as far ahead of Archer as maybe the perception is.
Again, this is another one of those stories that's been so interesting to follow. For the last year, we've been talking about these stocks. They've been growing so much. And now it's hard to see retail investors who bought into this concept taking such big losses early on. I think it's important to note with both of these, I think the real growth is if this takes off, it will be a long-term play. I don't think we're going to see, even if this commercial launch is next year, I don't think these stocks are instantly going to take off next year. What kind of timeline, again, talking about Joby and Archer together here, do you expect to see if these stocks take off? How long could it take?
I think we're looking probably, into 2028, maybe even 2029 before we're going to start seeing the companies become profitable. And that's going to be the key. If you look at a lot of companies, one of the companies that you and I talk about a lot is Palantir. Palantir kind of chopped around a lot. It was volatile. It was trading under $10. It was still trading under $10. It was still trading under $10. And then it kind of trickled up into the teens. And it was still there and still there. And the big move for Palantir happened after the company finally showed that it could be profitable. And then ever since then, it's been off to the races. I'm not in any way, shape, or form suggesting that either of these companies is going to give you the gains of Palantir. But what I'm saying is profitability is going to be the key. It's not just the fact that they're going to get to commercial operations. The question is going to be, are they going to be able to scale up and be efficient enough in their operations to get to a profitable stage? And once that happens, then you're going to really see the growth. And again, I think right now investors are thinking Joby might be the better bet for that. But right now, especially if you're a trader, Archer may be the better asymmetric opportunity. But I think both stocks are ones that if you're committed to investing in these companies for the long term and you have the patience to hold on, I think there's genuine upside for this company.
Yeah, when I think about which to add to Bridget's buys, these two names both have such strong potential. The one thing holding me back potentially is that if I add this to my watch list now, it could take a few years before it shows any strong returns. And I think Bridget's buys is going to be around for a while, but I'm still going to debate on which one to put on the list.
Yep.
Let's get to the next two names you have for us. Going to another area, both of these kind of touch on is more, we've talked a lot about small robotics companies and small AI companies, and these both fit that sector more.
Yeah, the next pick is Serve Robotics, which ticker symbol is SERV. All the talk, or I should say, a lot of the talk in robotics right now is about Optimus and humanoid robots and how soon they're going to get here, and we're all going to have robots in our house and such. This is interesting because this company has robots that are doing a specific task today. They have a fleet of food delivery robots, and people may have seen them in office buildings, on college campuses, in urban areas. The company does have revenue coming in the door. It's not a lot, but they do have some, and it's not profitable, but they're working towards that. The big issue here, and again, this is the reason why the stock has been selling off. If I'm looking here, yeah, I mean, like a lot of these stocks, it's down sharply in the last month. It's actually, gosh, it's almost been cut in half. The concern right now is about scalability, Bridget. They're trying to say, okay, you're doing well in the markets that you're in, but if you're going to get to that level where you're generating enough profit or generating enough revenue where you're going to become profitable, you're going to have to really scale up. And Serve Robotics admits that. And that's what next year and 2027 are going to be all about: scaling up their products, getting this fleet of robots deployed into other urban areas. And that's going to cost money. And of course, when you're a company that's not profitable yet, that means you're financing that through some sort of debt mechanism. And again, investors are just a little concerned. Are you going to be able to do this? Is this going to happen? Are you going to be able to scale up, or is this going to fail? That's the risk. But again, the stock's dropped by about 50% in the last month. It's one that you're going to have to be disciplined. You're going to have to hold on to the stock, and you're going to really want to pay attention to what they have to say in future earnings reports to see how this process is going to scale up the company.
Yeah, this one's interesting to me. I think about the place where I've seen these is my kid's favorite pizza place,
Oh,
Pizza
yeah.
Ranch. If you're in the Midwest and you're watching this, I want to hear in the comments, have you been to a Pizza Ranch? Because it's very much a Midwest thing.
Yeah.
But these robots, it's the only restaurant I can think of is that one. I know there's some similar robotic machines in some of the hospitals and nursing homes. I've seen them there too. But once you have them, it doesn't feel like an item that needs to be repurchased frequently. There's not widespread adoption of
Yeah.
these yet. So I think that scalability is such a good point for this one.
Yeah.
Thinking about that. One last question before we move on to the last stock. With Serve, I'm wondering, are they doing any research and development to get into other areas, like thinking about other use cases, other things that might, again, help with that scalability of what they're doing?
Yeah, I know that they have some partnerships with Uber Eats and other major retailers, so I think that's one way that they're doing it. But I think primarily what they're really needing to do is they just need to get a larger fleet of these delivery robots, and they need to open that up into different metro areas, and that's just, they're not there yet.
Another interesting stock that's down quite a bit right now. If it gets anywhere close to that high it's had, that's a lot of upside, but I don't know how long it could take to get back to that. Let's get to the next one. And this one is a stock that personally I was really excited about.
Yeah. Yeah, the next stock is Red Cat, and I know we have a lot of people that listen to this channel that like this stock, and I really will have to admit I wasn't familiar with this stock until until some of our viewers started asking us to look at it, and I've liked what I've seen so far. But again, we're talking about a speculative stock. This company's not profitable. They're generating very little revenue. What they do is they deliver advanced robotics, autonomy, sensing solutions for defense, national security, public safety, commercial customers. They're showing a lot of utility in that military defense space, and I think the hope is that will be something that will translate very well into seeing this business into commercial business. Stocks been down.
45%
Yeah.
down in the last month is a
Yeah.
lot.
I think when you start looking at specific names like Red Cat, I think that's more of falling in sympathy with all of these other technology stocks. I think it's just right now, there's a lot of investors that just don't have an appetite for these stocks, and they're just doing something that's very wise. They're taking the profit. They got the win. They're taking some of their profit off the table, and now they're just hoping to live to fight another day. And I think Red Cat's a stock that may be able to do that for them. Volatility is the name of the game here. It's going to be there, but I like the fact that the company is already in areas like the military, because if they can prove the use case there, it makes it easier to prove the use case in the commercial arena. And I remember when we talked about this on a MarketBeat Monday a couple of months ago, maybe, or a month or so ago, one of the things I liked about the company is that they've already done a lot of the dilution of the shareholders through the share offerings. They've already gotten through that. So hopefully they're in a better cash position right now, and investors aren't going to have to be dealing with that in 2026.
Yeah, this one, we had an internal stock competition, another paper trading thing, and Red Cat was my pick. It ended October 10th when Red Cat was up around $14. It's fallen so much.
Yeah.
It's down at $6 right
Yeah,
now
exactly.
in such a short time frame.
Yeah.
I do like what you described there, Chris. I hope that scenario played out for some of our viewers.
Yes.
If you made some gains, hopefully you sold at some point, and now we're just considering, do we get back into some of these stocks that we kind of gotten out of?
Yeah, or is it's also likely that they didn't sell their entire position, but they maybe just sold the part of it that they started with, and now they're just sitting there and saying, "Okay, whatever I've got in there now is pure profit," which would be another great strategy.
Let us know in the comments
Yep.
kind of how this has played out for you, because I'm really curious how everyone's doing right now with some of these names that, again, have been very, very popular. All right, well, that's a good one. Let's move on to the last stock you have for us. And this one, I think even at one point made it onto Thomas's monthly buy lists.
Okay, well, that's saying something here. So the company's name is Datavault, and I know this is another name that we've talked about a lot, that we've been asked about a lot on MarketBeat Mondays. They've made this gigantic pivot. They used to be a company that manufactured audio hardware, and now they're in this business of AI and data monetization. So they have information that they've collected, and they essentially are able to farm it out. And they've got some contracts to do that. They're growing the business. They've got contracts in areas such as biotechnology, carbon capture, sustainability financing. It's an interesting company. It's one that some investors may have to spend a little time with to really try to understand where this business is going. They do have some revenue coming in the door, but not a whole lot. But again, they're building these partnerships. And again, it's extending not just in the commercial side, but also on the government side. So the hope is that they're going to have significant upward leverage as demand for their services increases. And that's where I think the story is, because analysts certainly seem to believe that that demand is going to come. The stock has a consensus price target of $7. It's currently trading at $2.22. So that's over a 200% upside on the stock. So again, analysts are very bullish on it. It did get a sell rating from Weiss, from Weiss just the other day on Wednesday. I don't know how much weight I want to put on that, because Weiss has been very bearish about a lot of stocks. So it might just be one of those where they're just trying to kind of be bullish about a lot of stocks in the tech sector to begin with. You're going to want to do your due diligence on this one.
I think due diligence is the word for all of these stocks. Do your own research. See if you really buy into the idea. These are some names that you probably are going to want to hold on long term to really reap the full benefits. And also be cautious about when the market does have major moves right now. Have some stop losses in place, other things like that to help you keep yourself protected. I am really having a hard time, Chris, on picking which one I want to add to Bridget's buys. There's arguments to be made for all of them on which ones could see a return and actually grow. I think the consensus price targets, the analyst ratings on some of these are enticing to look at. I think right now I have it between Lithium Americas and Red Cat. I do think that there's a good future ahead for lithium, if especially with that government investment. I think they have what it takes to grow. But I think I'm going to put Red Cat on my list for this video, simply because I was into the stock before. It did really well before. I think that we are going to continue to see a lot of investment in defense right now, at least for the next couple of years. I see that investment sticking around. So I think that swayed me to Red Cat. We're going to see how well it does and track its progress over time. Chris, thank you so much. What do you think about my pick on this list?
I like it. Because I like it for the reason that we were talking about. I do think the sell-off in the stock is largely due to profit taking. I don't think there's anything fundamentally wrong there with the company. It might not be at the exact bottom yet, But I think you've got a good pick there.
All right, Chris, thank you so much. Let me know what you think. And again, here's that QR code if you want to go check out Bridget's buy list. We just started it this week, so this is just the second name I'm adding to the list, but it's really interesting to track these over time and also helps to show that volatility. I added Nebius Group on Monday during our MarketBeat Monday Live. It went up 10% on Wednesday and is now down again. So you can see the volatility too if you check this list regularly. Thanks again for watching, everyone. Let us know your thoughts on any of these stocks in the comments. As always, happy investing.